Hello everyone, this is the pre-market report video for today January 5th, 2023 in the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's have a look at what happened on Indian market yesterday, Nifty. It opened flat but was dragged down by Reliance, banks and metal stocks. So Nifty continued to go downwards, but positive European market opening supported the Nifty to some extent. However, again in the last 1 hour, it turns further red and closed near day's low. I guess Reliance was under pressure due to the crude oil price drop. So basically both oil price and the metal stocks were under pressure due to the concerns about demand in China. As for the banking stocks, it's not quite clear why they performed poorly. The only thing I can see is that yesterday FII sold heavy. For the 9th straight session, FII's net sold shares worth approximately 2,620 crore rupees. And again, as expected, DIs supported the market, but they just net bought only for shares worth approximately 773 crore rupees. Here, I'm guessing, I think FIIs might have been hesitant to hold position overnight due to the possibility of surprise news from the Fed's meeting minutes. In the end, Nifty was down 1.04%, Sensex was down 1.04% and Bank Nifty was down 1.07%. Then after our market hours, all European market opened and closed positively. Please have a look at the German's major index. Throughout the day, it was moving in one upward direction. This was likely due to the release of the December composite PMI data for Europe, which came as 49.3, indicating a very slight contraction. To be frank, at present, one of the major concerns that the world having is regarding the recession or the slowdown in Europe. And this only slight contraction news helped and made all four European major index to close really positive. Then coming to US market, last night, it was a bit of a roller coaster ride. S&P 500 opened slightly positive, but then the number of job openings in US for November month came as 10.4 million, which was less than the 10.5 million in the October month. But it was more than what Reuters forecasted, which was just 10 million. This is completely against what market wants and caused the S&P 500 to dip. However, the ISM manufacturing PMI for December month came as 48.4, which was lower than November's 49. This provided some support for the market and made them to trade positive, since bad data was what US market expected, so that it would force the Fed to pause the interest rate hike. Then at 2 p.m. Eastern time, Fed released their meeting minutes, which made the US market very volatile to dip back into negative, then again back to positive. Basically, there was no new news, all were discussed and known things. In short, they expect no more 50 basis point rate hike and they expect 25 basis point hike in February, then 25 basis point hike in March and finally 25 basis point hike in May. That's all. Fed will pause it with no further rate hikes. So basically, US interest rate to max out at 5 to 5.25%. In the end, Dow Jones was up 0.4%, S&P 500 was up 0.75% and Nasdaq increased by 0.69%. Last night, tech stocks provided some support as Tesla and Netflix shares increased around 5%. However, energy stocks drags the market as oil prices fell near 5%. There are two reasons for that. First, China, for their oil refining companies, they increased their crude oil export quota for the refined oil products due to the poor domestic demand expectations. Then the second news is regarding Saudi Arabia. They signaled that they are going to reduce the price of light grade crude oil to Asia in February. This two news puts huge pressure on oil and energy companies. In terms of oil price, at the time of this video, WTI crude oil was traded near $73 per barrel and Brent crude oil was traded near $78 per barrel. Then regarding dollar index and 10-year treasury bond yield, it decreased by around 0.3 and 2.5% respectively. In terms of numbers, dollar index was traded at 104, whereas 10-year treasury bond yield is around 3.69%. All these three values, oil price, dollar index and 10-year treasury bond yield, all are positive for the Indian country and the stock market. However, Indian areas in US market just followed the Indian market. Infosys ADR and Wipro ADR closed 0.71% and 0.42% negative. HDFC Bank decreased by 0.82%. Only ICICI Bank closed marginal positive of 0.05%. Then regarding SGX Nifty, at present at 3:30 am Standard Time, it closed at 18,158 mark and Nifty futures closed at 18,162. And because of that, I guess it's showing the gap up opening of around 30 to 40 points. So that's all about what happened on global market. Now let's discuss the India related info. Coming to stock and sector specifics. First, Reliance. Because of this over 4% oil price drop, it's clearly negative for the stock. But the stock was already down to some extent. And there are some positive news about Jio 5G launch Reliance Retail, which we discussed yesterday. But it was not yet materialized on the stock due to the energy crunch. Then about banks, again yesterday in the aftermarket hours, HDFC Bank released their loan book. I mean, on year-on-year basis for December quarter, their credit growth increased by 19.5% and their deposit growth increased by 20%. This is very in contrast to the overall banking system. I mean, on the bi-weekly report, RBI reported only 9% deposit growth, which means HDFC Bank has no credit crunch at all. This one data got the potential to turn the table about HDFC Bank. I know yesterday HDFC Bank was the second major Nifty dragger and its ADR closed negative. However, I believe this is very positive for HDFC Bank. Again, I can be wrong, since anything can happen on the stock price as it's based on demand and supply. So, as a summary, there was a positive momentum at the global level based on the US market close. However, Indian areas were signaling negative, but again, SGX Nifty indicating positive opening. And I believe yesterday's HDFC Bank's credit and deposit growth was very positive. However, it's making the SPI to look very negative. As I said earlier, oil price, dollar index and 10-year treasury bond yield all are good. Now coming to technical, on daily chart, Nifty forms a long bearish candle and Bank Nifty forms a clear bearish engulfing pattern, indicating a downside breakout. It seems market have reversed down after a small pullback rally. Further weakness could push the Nifty further down to the low of 17,800 level in the short term. A pullback rally can be confirmed only if it moved above 18,150. Then on daily chart, from buy on day before yesterday in moving averages summary, now it turns to sell. It's mainly because as 5, 10 and 20-day moving averages turns to sell. Whereas at present, only the 100 and 200-day moving averages are indicating the buy signal. Then in case of technical indicators, only stock RSI is still indicating buy signal. All others turns to sell condition. As a summary, it's a strong sell signal. Even RSI turns to neutral from sell as its value drops to 43. In case of Bank Nifty, the summary is marginally better, but that too downgraded. For example, technical indicator summary turns to just a buy from strong buy on day before yesterday. Whereas in case of moving averages, 5, 10 and 20-day moving averages turns to sell signal, and thus in terms of summary, it downgraded from strong buy to just buy. From option change in open interest, for Nifty, significant put options unwinded at 18,100 and 18,300 and more number of new call options added between 18,100 to 18,400. Then based on overall options open interest, there are still some short straddle present between 18,000 and 18,100 and the next nearby maximum put option open interest is present at 17,900. So 17,900 is the immediate support and hoping Nifty to hold 18,000 at least. On the higher side, 18,200 is the strong resistance. Then about Bank Nifty, from change in open interest, the story is same as Nifty. Significant put options has been unwinded from 43,100 to 43,500. More new call options added between 43,000 to 44,000. Then based on overall open interest, now 43,000 got the significant short straddle, 42,500 is the support to look out for and 43,500 is the resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.